Hi, my name is Cody Van Voris, and I will be presenting our Birken Road Report's continuing coverage of Craftmade International on behalf of my team members Jingjing Huang, Margaret Tuo, Alec Rajitsky, and Evan Nicole. Craftmade International is a designer and manufacturer of ceiling fans and accessories based out of Coppell, Texas, that was acquired on November 29, 2011 by Litex Industries for $4.25 per share. Litex is a private company and competitor of Craftmade's based in Grand Prairie, Texas. On November 30th, Litex announced that they had acquired a total of 93% of all outstanding shares. The merger will make Craftmade a wholly owned subsidiary of Litex. Prior to the buyout, Craftmade was listed on OTCQX under the ticker symbol CRFT. Craftmade's market capitalization was $25 million, with 5.7 million shares outstanding. Craftmade's enterprise value was $68.4 million. Our analysis prior to the buyout gave Craftmade a 12-month valuation of $5 per share outstanding. Two Texas salesmen, James Ridings and James Ivins, founded Craftmade in 1985. We think it is worth noting that prior to their joint venture, Ivins was a salesman for Litex. Craftmade has since been in the business of the design, manufacture, marketing, and distribution of various products in the household durables industry, including ceiling fans and accessories, internal and external light fixtures, and other home decor accessories. In 2008, Craftmade added outdoor furniture to its product offerings with the purchase of Woodard and its associated brands and facilities, including a plant in Owosso, Michigan. Craftmade continues to be heavily design-oriented in its products. J. Marcus Scruter, the CEO of Craftmade prior to the buyout, said regarding Craftmade's mission, "We take basic things and make them pretty." Craftmade organized its products under two segments, mass and specialty. The specialty segment comprised branded products that were distributed to showrooms and specialty stores. These products were characterized by their distinctive fashionable designs and high quality, and provided Craftmade with the highest margins. Craftmade also distributed its mass segment products to mass merchandisers such as Lowe's and Costco, usually under their respective private labels. In the last year, Craftmade stock had declined from a high of over $5 per share to a low of $1.59 per share on October 5, 2011. However, reaching that point was not a steady decline. The first turning point came on May 23, 2011, when Craftmade released its third quarter earnings report that showed net income for the quarter was only $355,000 compared to net income of $494,000 a year earlier. Worth noting in that quarter is that the specialty segment net sales were up 10% over the previous year, but mass segment sales were down 29%. This is indicative of a general trend in Craftmade sales and strategy over the last year. Craftmade had been trying to refocus more on the high-margin specialty segment and less on the mass segment, which was unpredictable as a distribution channel and increasingly squeezing margins. July 15, 2011 is the second point on the price chart we want to mention. Craftmade released a report that day saying it had sold one of its facilities in Coppell, Texas on a sale-leaseback basis. This signaled to investors that Craftmade might be facing problems with liquidity. Craftmade reported that it would use the proceeds of over $12 million to pay off existing debt and a portion of its operating line of credit. On October 7th, Craftmade announced the buyout offer by Litex for $4.25, and that the board had recommended accepting the offer, propelling the stock price to over $4 per share until it stopped trading. Here we are looking at Craftmade's stock price over the last 5 years, compared with U.S. consumer spending and U.S. housing starts over the same period. This illustrates the close relationship between Craftmade's revenues and those two macroeconomic factors. As housing starts began to decline, so too did Craftmade's stock price, with a few months lag for reporting. The precipitous drop in consumer spending and the condition of the U.S. economy also strongly affected Craftmade's sales and stock price. It's worth noting that after declining to under $2 in 2009, Craftmade's stock showed signs of life, rising to over $6 in 2010, whereas economic conditions had remained stagnant through the same period. Craftmade focused on improving its sales per home start over that period and was very successful in doing so, indicating Craftmade's ability to weather the economic downturn and build a strong position in anticipation of a rebound. In a comparison of peers prior to the buyout, Craftmade initially looks to be undervalued on the basis of its price-to-book value ratio at just 0.89. However, closer inspection of other comparables suggests otherwise. Craftmade's extremely high EV to EBITDA ratio at 50.32 times EBITDA suggests a large amount of debt on Craftmade's books. The debt-to-equity ratio at 122.88% supports that assessment. Using a combination of comparables and DCF, our team reached a 12-month projected valuation of $5 per share outstanding prior to the acquisition, which compares favorably with the buyout price of $4.25 per share. Craftmade's board chose to accept the tender offer after a presentation by B. Riley Investment Research. B. Riley valued Craftmade between $2.60 and $4.30 per share. The unchanging state of the U.S. housing market was influential in the board's decision to accept the tender offer, leading to the recent acquisition, which was the third such offer by Litex in the last 2 years. We believe that Lytec's acquisition of Craftmade will be able to capitalize primarily on these possible synergies. Lytex is very focused on the mass segment. Craftmade has historically operated in both the specialty and mass segments, and its specialty segment is more profitable. Also, as I mentioned before, Craftmade has been refocusing away from the mass segment over the last year in favor of specialty. Lytex is strong in both manufacturing and importation, whereas Craftmade is very strong in its design. Lytex also will add Woodard and its brands to its product line, diversifying Lytex beyond ceiling fans and light fixtures. In constructing our report, we made a visit to Craftmade's headquarters in Coppell, Texas, where we met with Mr. Scruder and Rick DeCastro, the Director of Investor Relations, and were given a tour of the facilities. Mr. Scruder remained confident in Craftmade's capabilities and the state of the economy and mentioned that Craftmade had the lowest return rate in the industry, indicative of the quality of Craftmade products. He also mentioned Craftmade's success in reducing order-to-shipment times to only 2 weeks, best in the industry. By the end of our visit, our team came away with a better understanding of the decision-making process for top management as well as the intangibles that affect day-to-day operations. We believe that Craftmade will provide significant value to Lytex in the future. Despite unfavorable circumstances, Craftmade continued to innovate and make quality products. Thank you for listening to our analysis of Craftmade International for Burke and Road Reports. The Burke and Road Reports are produced solely as a part of an educational program at Tulane University's A.B. Freeman School of Business. The reports are not investment advice, and you should not and may not rely on them in making any investment decision. You should consult an investment professional and/or conduct your own primary research regarding any potential investment.